All right, what's up guys? Welcome back to another video. Today I'm going to be continuing my sort of lessons that I've been doing on support and resistance. Specifically, today I'm going to be talking about supply and demand. I'm first going to explain the concepts behind supply and demand itself. Then I'm going to show you how you can find the supply and demand zones on the chart. And then finally, I'll go through and give you guys some examples of how you can trade supply and demand, whether it's day trading or swing trading. And before I get into the video, make sure you go and join my Discord community using the link down in the description. I'm very active in there and I answer questions, post my watch list and all the trades that I take, along with there's also a lot of educational content in there that can probably help you out. So starting off with the concept of supply and demand, it's basically down to two factors: balances versus imbalances. So a balanced market is a market in which buyers and sellers agree on price, and an imbalanced market is where there is a disagreement between buyers and sellers. A balanced market may look like a market that is consolidating or not really moving much, while an imbalanced market has price moving aggressively down or aggressively up in either direction. Now, markets are always moving in between balanced and imbalanced conditions, whether it be the stock market, futures market, crypto market, even the real estate market. Like any market will always be either balanced or imbalanced. And if you were looking at a price chart, it would look something like this, where you see maybe a balance period, then an imbalance period, another consolidation, another move like this, and price constantly moving between balance and imbalance periods. And if you haven't seen my other video where I talked about accumulation and distribution, these tie very well into each other, where this would be like accumulation, distribution, impulsive moves. It's just all different words to explain, but specifically for supply and demand, it's a lot easier if you understand these terms as a balance and this move as like an imbalanced move. Now that you understand basically the concepts of balance versus imbalance, now I'm going to go and explain the thought process, or basically the theory behind supply and demand and why people believe this works. So essentially, if you have a balanced market where people are buying and putting in orders, you know that there is a lot of demand here, right? That there are just orders being processed in general. If price goes up, you know that this is a demanded area because buyers were active here. If price came out of this area and went down, you know that there's supply here and that a lot of the big money flowing into this area was short bias and was actually selling. So the concept is that if price has a strong imbalance move, when price comes back to this area, the concept is that price will make another push out of this area, right? So what this would look like, this would then become a demand zone. So when you see an area of a balanced market right here, right, you see a balanced market followed by an imbalanced market, a strong push out of that area, you have the idea that the orders that were being filled here were long biased and there is demand at this area, right? So now that when price comes back to this area again, there will still be demand and price will continue to at least make a push out of this area. So now that you understand the concepts, how would you actually be able to see this on a chart? Well, on a chart, these balanced and imbalanced areas will be replaced by basically candlesticks, right? So you have two different scenarios: rally, base, rally, and rally, base, drop. So if you just want to quickly be able to understand this, a rally is a big move, a base is where price flattens out, and then a rally is another move after that. And then the only difference between a rally, base, drop is price rallies, it bases out and it drops, right? And basing is the same as a balanced market. So if we're talking about balances and imbalances, this is a imbalanced move, a balanced move, another imbalanced move following that. This is the exact same thing, except the imbalance move following the balance move is a drop instead. So I'm going to draw out the candlesticks. So if we had a rally base rally, we'd have a big strong push, like one strong candle, right? And then after that, price sort of stalls out right here. You might see something like a doji candle usually, if you're familiar with that, and you see another strong move after that. This right here is your rally, your base, and your rally. And what you do is you'd find that there is demand in this area right here. So now when you think price will come back to this area, if price trickles up, trickles down, and price comes all the way back down, you'd expect price to slow down in this area and start pushing higher again. And in this drop-based rally, it would basically be the flip side of this, where here you have a situation in which supply is created. So the next time that price comes into this area, right, I'll make this orange actually, but next time price comes into this area and price trickles back up, you expect price to push back out of this area. And it's the exact same thing. So you can have a situation like this where supply is created, right? If this were an opposite situation, this could be supply being formed, right? This would be another drop based drop, right? If this were flipped, or if you had a drop based rally, this could actually be demand formed. So I'm going to show you all these examples on the chart, but it's different situations and scenarios, whether price comes up out of it or price comes down. That's how you determine whether it's supply or demand. Okay, so now we're on a chart of the NASDAQ futures, and I'm going to be showing you some real examples and how you could have potentially traded them. I have 4 different examples. 3 of them are on the daily chart and 1 is on the 30-minute chart, and I'll basically show you how they work in real time. So starting with our first zone right here, I'm gonna get rid of this oval, right? We have a strong rallying candle. We have this basing candle, and we have a rally following that candle, right? So if we were just looking at this area right here, this is all that we would see, and you could draw a nice demand area right here. Now, usually I color mine green and red, but just for like the sake of this video and time, I'll just keep it blue. So this right here would be demand, right? So the next time we expect price to come right here, we would expect it to bounce out of here, which you can see that it did. Now looking at our second spot, we can see that we have a rally base drop. So we know that supply is formed here. It's not as clean of just a doji candle right here, but as long as it's a tight candle where basically the open and the close are very close to each other, that's how you can know that it's an area of supply. So what I do is you draw from the bottom of the bodies next over to the top of the wicks, and that's how I do it. And if it were demand, you draw it from the top of the body to the bottom of the wicks. And then down here, we have another area of demand where you got a drop, a base, and a rally. So that means that demand was formed. So when price returns to this box, you would expect buyers to be active. And then on the 30-minute time frame, because this works on every time frame, you can have daily demand, 4-hour demand, weekly demand, all types of demand, right? And now we're on the 30-minute time frame, and you can see that even intraday right here, right? I'll get rid of this. We have a small drop, base, drop right here, and that's where you see that when price came back into this area, we saw another move out of it. Now supply and demand can be used for swing trading and just longer term positions, depending on if it's like a weekly or a daily or even like a monthly demand. You can use it to swing trade. However, I find that supply and demand really does work best with day trading, because no matter what in these areas, a lot of the times when you see that price comes out of these areas, right, they eventually end up coming back through and breaking above them. However, as long as you can capture just small price movements out of them, then that's what ends up working best. So looking at our first area of demand, right, and this will show you why we talk about imbalance and balance periods, right? So I told you consolidation and then a strong impulsive imbalance move, right? This is like, even though we looked at just doji candles basically show us consolidation. These are what candles that like basically close near the highs or the lows of its opening and closing. These are where there's a lot of consolidation, and then we see a strong impulsive move showing that buyers were active. And 2 days later, when price comes into this area, we first see price trade in here, and then we see price come in here. And usually when price comes into these areas, what you're looking for is volume, right? So you see that when price comes into this area, it was market open, so it's hard to tell if that's just like market open volume, like a lot of volatility coming in. But then you see the next touch and we see a strong amount of volume, and even when price comes back down again, we see even more strong volume here. And then that would allow you to take price. You could hop in a position long, say right here, put your stop below. You could put your stop either below the zone itself, below the low, and you see that price rallies out of here, and you can get a really nice risk to reward. Next, we have our supply that was formed here on the daily chart as well. It doesn't always have to be super clean consolidation, but you can see that when aggressive moves come from this area, price consolidated here, and you saw aggressive selling whenever price was in this area. You can see that on this day, we came very close to touching it and had somewhat of a move down. However, price didn't fully drop into the zone, or basically rally into the zone. And now we see another move. You see strong volume, right? A big strong volume candle coming into this area, showing that orders are being filled and that there's a lot of absorption happening. And right here, you could have taken it short at this area, stop wherever you want, depending on your risk to reward. You can see that there was a very strong move, price came back up again, but it eventually sold off all day. And that was basically the high of day. So supply and demand really controls how the markets move throughout the day, and that's just how the market forces in general work. Our third one over here was our drop, our base, and our rally. You can see more consolidation on the lower time frames, but on the daily chart, it just looked like a small basing candle. But you see this really aggressive push out of here. So you know that when price comes back down to this area, we can see another strong rally out of it. You can see that on this day, right? You see volume, you see price coming in, and you see like more demand being formed right here. Like this in and of itself is technically demand, right? We have our drop, our base, our rally, and you see new demand being formed in a demand area already. And right here, you could have taken it long, put your stop below, speculating that new demand would be formed. And you'd see that price up here rallied a huge risk reward. It's like over 1 to 3, 1 to 4 coming out of this zone. And then lastly, we have our 30-minute, right? You can still see, even though it's not as much consolidation, we still have a drop here, or where price rally, you see aggressive selling, price consolidated right here, and we had another drop out right here, and you'll see that price came up into this area, not as much volume, but still growing, increasing volume that was out of the ordinary. You see new supply being formed, right? We see a rally, a base, a drop. We see price come into this area and keep rejecting, and you could have taken this position short, stop above the high right here, and you see that's also another great risk reward, and price ended up selling off for the rest of the day. So just to recap, we have our rally, base, rally, our drop, base, drop, and then our rally, base, drop, and drop, base, rally. These are your 4 different areas where basically supply and demand can be formed, and you switch through different time frames trying to find these doji or small candles that basically signify that we had an imbalance period, a balance period, and another imbalance period. And you expect that when price comes back and returns to these balance areas, that's where you can see small moves. Even if it's not that aggressive of a move, if you're trading it on a lower time frame, like you go from a daily demand zone down to a 5-minute, you're going to see a nice move where you can get a nice risk to reward and take price long out of it for a quick trade. All right, well, that's all for the video. If you like this video, make sure you like and subscribe. I'll be putting out more content soon as well. And as I said, if you aren't already in the Discord, make sure you go and check it out. Thanks for watching.